1, 2, 3, check. Just can you please give me a sound check if you can hear me and you can also see my screen? Wonderful, great, thank you. Well, good morning, good afternoon, and good evening, depending on whatever time frame and wherever location you are based. This is Naeem Aslam, Chief Market Analyst at AvaTrade. I had the research at AvaTrade and all the analysis that you read on our website blog and also in our videos, in technical and fundamental videos. They are done by myself. So I'm glad to have you guys here hosting for our weekly webinar. And it is an opportunity for you guys to really understand and master your skills with respect to different topics. So as for today, the topic is how to trade the US non-farm payroll data. In this particular master class, we will look at various different asset classes that you can trade and how to trade, and of course what to read and how to read the economic data. So these were some of the main points that we will be covering in our webinar, and of course we will look at various different strategies and define the technical and fundamentals as we go along. But before we do that, as always, it is important for us to do some of our housekeeping work. So first of all, in a series of 3 questions, please say yes if you have attended any of my previous webinars. Okay, Julius, I see so many different, so many names that the people who have attended. That is really, really good. And remember, folks, as always, these webinars, they are recorded. So if you cannot attend any of the webinars, you can always go back to our YouTube channel and find the recording of each and every single webinar, or just to revise them as well, you know, ahead of the US non-farm payroll is not a bad idea as well. Now, the second question is because every week we do get new people coming into this. So please say yes if you have been trading under a year. Okay. So I see again a lot of people saying yes. So that means we have people who are just new to this trading world. So this helps me to define the strategy, define my sophistication level in terms of my terminology and in terms of my strategy. Now, the final question I wanted to ask you guys is, please say yes if you have been trading for over 2 years. Okay, that's great. So we have few people, very, very few people who've been trading for over 2 years. All right, okay, so that's, yeah, okay, you know, that's okay. Someone is saying that, yes, I have been, but losing. But remember, losing is part of this business, but it is all about risk control. It is all about defining levels and trading along those levels. That is what really matters, because obviously you are not going to be right 100% of the time or all the 10 out of 10. All what you need to do is to make sure that your risk parameters which you are using, they are defined, and then any risk that you are taking is within your trading plan. That is the most important aspect of this. So let's continue before you know, without any further delay. So the most important thing for me before we continue is to go through this slide of disclaimers and risk warnings. So anything which will be discussed in this particular video cannot be perceived as an advice. The full disclaimer is in front of you, and if you wanted to read more, please go to our website. Now, for those of you, you know, who wants to contact, who wants to learn what exactly is happening in the markets, folks, as always, I cannot stress enough the importance of you guys joining Twitter. because Twitter is the ultimate form where you can find the first-hand information and quickly, because that is the key over here, because you don't want to delay the information. You don't want it to find the information when it is too late. While you are trading Forex, while you're trading for commodities or equities, which are very much trading like a Forex these days, especially the pharmaceutical stocks, you wanted to have the information delivered directly to your mobile in a notification in a short and a concise form. This is what Twitter does. And I'm very, very active on my Twitter account discussing all the major agendas and discussing the major points or factors that drive the price action. So the Twitter handle for myself is right in front of you, which is Naeem Aslam 23. And of course, for AvaTrade, that is there as well. And I will show you in a short while how to find us on Twitter and how to really interact. The second thing is, of course, a YouTube channel. On a daily basis, I produce 2 different contents in a video format. First of all, this is your fundamentals. It's information in a very much digestible way, especially for those traders who've been trading less than 2 years. You can easily understand what really the market is going to do and how market is likely to react to those ones. So it's quite important. And for the second, technical analysis is mainly for those investors or for those traders who have a basic understanding of technical analysis, and then they want to define levels and so on and so forth. Now, before we go any further, let me just quickly show you that where how to find us on Twitter and what to do once you have it. So here we go. As you can see, this is the Twitter handle over here for myself. And as you can see, very, very active on Twitter, very much, sending you guys all the important information with respect to stock market, with respect to Forex, with respect to commodities. So it is quite an important thing for you guys to keep an eye on making sure that you get all the information. And of course, if you have any questions in relation to anything, feel free to tweet back, feel free to comment, and then I'll try to come back to you guys as soon as possible to come and answer your questions. The second aspect is, of course, the AvaTrade's platform, the Twitter account, and make sure that when you are doing that, you follow the one with the verified account. This is very, very important. And again, as you can see, there are views on that, and this is a very short video, for 1 to 2 minutes video, where you can really go and understand things even more in a concise way, rather than spending 5 to 6 minutes, because this information comes very, very quick. Now, finally, the last one is the AvaTrade. AvaTrade's YouTube channel. Let's just go to YouTube, find the AvaTrade, and then over here you have all the fundamentals and other topics coming over here. So make sure that you guys are keeping, you guys are staying up to date with respect to these. So now let's go back to our presentation and the agenda for the day. So the importance of US NFP, what makes the US NFP reading, what instruments to trade, the current state of markets and analysis, defining levels and defining a strategy. So that is pretty much what we're going to cover. Now, first of all, the importance of US NFP data. The NFP data comes every month, the first Friday, most of the time of every month, right? The NFP data gets a large number of readings and it brings enormous amount of volatility. So let me bring you to how to find this data and then how to read this data more importantly. So of course, you can go to our website to find the calendar. You can go to Forex Factory as well, where you can find all the information. So over here, first of all, the most important number, which is about to come in a 5 minutes time or so, is the ADP non-farm employment change. This particular number really sets the tone with respect to the stock market, because if this number is good in terms of ADP non-farm employment chain, which is what we also call a private, then it shows us that the unemployment rate is also going to is likely to trend in the same direction as well. Now, what we are expecting today is a number of 1.2 million, while the previous reading was 2.3 million. So obviously, there's the number of 1.2, depending on where the data will come in. That's how the market is likely to react. And the other important reading with respect to the US non-farm payroll is going to be your US ISM non-manufacturing PMI data, which is going to be coming later on at 3 p.m. London time. This also gives us an indication and a good sort of a gauge or information that how the US employment market is really faring. Now, in terms of getting the US non-farm payroll number, click on calendar and then go on to Friday, which is the 7th, right? Because 7th is the Friday. And then you can see at 1:30 UK time, we are going to get the unemployment rate. Obviously, the forecast for the US unemployment rate is 11.1% against the previous reading of 12.3. So meaning the unemployment rate is expected to tick even more lower. Our average hourly earning is again something which kind of really moves the market as well. But this particular number isn't really that important right now, because the market is an employer market. It's not a labor market. It's not an employee market. But the number is expected to come in slightly better. Again, the US NFP data, the headline number, which is the unemployment rate, doesn't, I mean, of course it matters the most, but it isn't the only number where where the market really reacts to it. Other components as well. And then secondly, sorry, I was reading the wrong one. So that's the unemployment rate for the Canadian economy. For the US economy, that's what I was thinking. For the US economy is 10.5%, because then the previous number is 11.1. So the moment that this number falls below 10%, it is really going to bring enormous amount of confidence for the US economy, because the number, well, this number was expected to rise to 20%, but it is never traded above 14%. And then now it is kind of trending to the downside. We have a 2 or 3 months of a consistent downward revision, the consistent downward reading for this one. And if today's number also comes in better, then obviously this is going to gel really well. So let's focus now on the US ADP number, which is about to come very, very soon. So in terms of derivatives, what you can really trade, of course, it is your gold price, and of course, it is your indices and your Forex as well. But we are going to keep an eye, for the sake of this particular data, on the euro-dollar pair. And then we are also going to keep an eye on gold prices as well. We're going to change the numbers to 15 minutes. And we will see from here. I think I just kind of need to, yeah, that's what I kind of needed to do. So there we go. So right now, gold prices are trading at 2040. The maximum that the price went was 2044. Now the price is consolidating. This is the number which can really move the market enormously. So let me bring out the Bloomberg Newswire. Again, this is something that you probably don't need to pay too much attention to, but the Twitter, now I'm going to show you that why it is quite important for you guys to follow us on Twitter, because I'm just setting things up while we speak, because the moment that the data is going to come, I'm going to tweet the data straight to you guys in a real time. There you go. ADP research number. The data has been out and the data has come. It added 167,000 jobs. So the ADP data has added 167,000 jobs. Now I have tweeted that straight away. Now if you are trading, you will get that information straight to your mobile notification. Now in terms of a market, the number is a 167, not much reaction happening here. Now we can go back. always, and then see that what the expectations were as for today, because today is Wednesday, and then today was when the ADP number was going to come. So we were expecting 1.2, so the number has come in at 1.6. So let's just refresh this just to show you guys. So there you go, 167, right? 167. So that is 167,000. So it's not even million. This is 167,000. That was 12,000. That was 1,200. So that was just nearly a million. That was in millions. But this is 167. So obviously this data is horrible. This data is really, really horrible. So it is okay. Let me just see that the more news coming out on this one, if Trump has said anything. July, good producing jobs up. Services providing jobs up. July services private sector jobs expected. Job sector reports. Okay, let's see what Bloomberg is also reporting. So Bloomberg is on a commercial break. Well, that's a disappointment. But in terms of a market price action, what you're seeing is because the number was not as good as the market was expecting. So that's why we're seeing for some weakness in the dollar, and that weakness is translating in terms of a strength for the gold price. When we look at the euro dollar price in terms of the number, again we've seen the euro dollar pumping to the upside on the initial reaction. Now it is retracing. The upward direction was mainly because of the number which has missed the expectation by a large margin, large margin. Now in terms of the equity market, I think, again, because the number missed it by a large and a huge margin, we're seeing that retracement happening. The Dow Jones index is clearly falling on the back of that. And then we will see a similar echo of this as well in the S&P 500 index as well. Now remember, I'm looking on a 15-minute price candle, and then you can see how the prices are really retracing. So the opportunity right now in terms of this is that you've got to go into a 30-minute time frame. So this is the area of support that we are really looking at between 3,308, and then targeting to the upside. But remember, the good area of support in terms of a price action is really between 3,299. Now, if the price breaks below this one, then you may want to target this area. Wanted to perhaps one could short this one and then cover it again just above its 50-day moving average. So that is the area that we are kind of really focused on right now. So now we will move on to the next section, and we will look at that. What does this data, so how we will go back to the topic of our original discussion, which is your US non-farm payroll. So let me bring that back up. So I've discussed the importance of US NFP. I've discussed what makes the US NFP data. Now we will talk about the third point, what instruments to trade. Again, we have briefly already shown you that. But on the back of the US NFP data, one can potentially trade anything. It doesn't matter whether it is a commodity, whether it's a stock, whether it is Forex, or fixed income. Fixed income is obviously beyond the scope of this particular webinar, but generally speaking, on the back of this particular number, investors are more likely to pay attention to euro dollar, sterling dollar, dollar yen in terms of a Forex pairs. In terms of equities, investors are again more likely to pay attention to Dow Jones, NASDAQ, and the S&P 500 index. Now, in terms of commodities, investors are likely to pay attention to gold prices more, because gold prices are trading against the dollar, and then they are also, as a reserve currency with the chatter keeps increasing more and more. So I think that is also an important point. So now Let me bring out the MT4 platform, and then we will go through various different levels. But before we do that, I will also like to have a quick look at different questions if anyone is asking any questions and if there are any important questions to answer. Yeah, okay, so Trump said very good numbers are coming. Let's see if that happens. Natural gas is not so much of a trade on the back of this one. Okay, so the Twitter account for myself, it is right over here once again, Naeem Aslam 23, so it's just right over here. So feel free to follow. How to spot an entry point, we will discuss that shortly, don't worry about it. Okay, I don't, well, if someone is having a sound issues, I think it's just you, because the rest of the people can really hear it. Okay, all right, so let's go back. Now, how to spot an entry point. Now, with respect to entry or exit points, first of all, what we got to look at is the S&P is not on the 30-minute. We got to look at on a daily time frame. And then when we look at the daily time frame, the first thing which kind of pops in front of us is the S&P 500 index is about to reach its all-time high, which is just right over here. Now, if the index reaches over there and then it starts to retrace, that means double top is formed and prices are likely to continue their journey to the downside from there onwards. But again, that sort of a reaction is very much based on if the prices continue to move their journey to the downside, and we don't really know that yet. But right now, I think the opportunity, the entry point, if the data is weak and if the market continues its journey to the upside, the opportunity could be coming in between these levels which I have described. Now, this opportunity could be on the downside because if the data comes abnormal, like very, very bad, like we've seen today, you could put a stop loss on top of this particular zone and then target this entry zone, which I have just mentioned over here. Or the other aspect is that the breakout trade, in the direction of the trend. The breakout trade is at the moment that the price breaks out of this one, one can take that trade on the long side and place the stop level just below its recent low. So let's say that the price continues to move higher like this, comes over here, comes going over there, boom. Then this particular low, which could potentially be forming, should be your low, your stop loss level. Because obviously you want it to leave some room, for maneuverability, but you don't want it to leave too much room as well, as that will work against you and you are likely to lose enormous amount of capital. So that is for the S&P 500 index. With respect to the Dow Jones index, what we're really looking at is on a daily basis, first of all, that the price has bounced from, so all of these ones, they are moving averages, simple moving averages. On a daily time frame, they are daily moving averages. On a weekly time frame, they are your weekly moving averages. We buy any equity when the price moves above that, when we sell when price moves below that. Or we buy when the price is near its moving average. Now, for instance, as over here, the price was retesting its 200-week moving average, 200-day moving average. That was an opportunity to get back into the trade. But if you look at with respect to its 50-day moving average, we can clearly see that there was no opportunity with that because the price violated this particular moving average and it continued to move lower, and then it touched the second line of this particular moving average. But one important thing when it comes to S&P 500 index is that the price is trading above all the three important moving averages, very, very important factor. And secondly, the price is also trading above the 200-day moving average is trading above its 50-day moving average. Again, that is very, very positive for the S&P 500 index. Now, for the Nasdaq, Obviously, it is doing its own thing. There is no retracement, very small sort of a sell-off that we've experienced between these 2 weeks when COVID kind of hit. But after that, the prices, sorry, this wasn't the COVID was over here. But after that, the prices have started to continue their journey to the upside. They moved above the previous high, as you can see. And my prediction is that this momentum is likely to continue. Now, quickly have a look at the Dow Jones Index. We already covered the Dow Jones Index. We covered the Nasdaq as well. Now we will quickly have a look and gold prices and then move on to oil prices. When we look at gold prices on a daily time frame, I really love this trade because I believe that the Trump administration is likely to remain negative on this particular aspect, meaning they will think that these factions are continuously going away. So it doesn't really matter. Let me just look at the few questions. So the moving averages, the period that I'm using, they are 200, 150. Again, 200, 150. Those are the periods. So again, for the gold prices, what I'm looking at in terms of the prices is that they are good. They're moving higher and higher. I really don't see any retracement coming anytime soon. For gold prices, obviously this is a daily chart, so these were done for a weekly chart. So if I change that to weekly, that will make sense. This is 50-week SMA, this is your 100-week SMA, and this is your 200-week SMA in green. So the prices are likely to continue their journey to the upside. There is literally no retracement when it comes to gold prices. I think probably the next level of resistance for gold prices is 2,500. However, if on Friday the US non-farm payroll data comes very strong and the number shows that, okay, the US economy isn't really deteriorating, the number comes below 10.5% unemployment rate, we could see retracement for gold prices. Where could be your entry points in terms of a gold prices? It could really be in around this particular mark, the one that I'm about to draw. Again, this is a very for investors who can stomach a little bit more risk. But another area, an important area of support for me, is just where the 50-day moving average is trading on a daily time frame. Obviously, the price is going to take some long time before it gets here, and especially if the price breaks below the 2,000 mark, it's not going to show very positive results. But right over here, as you can see, sorry, let me get back to it. As you can see, it is still below the 2,000 mark, but the chances are that the price will bounce. So keep an eye on these particular price levels. They are very important. Now, quickly touching the base on oil prices. Again, oil prices are rising today. They have come out of this ugly area of consolidation on a daily time frame. If I can just make the chart a little bit bigger, there has been consolidation going on for a long period of time. Today, the price is breaking out of that, and moreover, we have another bullish sign coming where the 50-day moving average is about to cross above the 200-day moving average, and that would be again positive. So now I'm gonna allow you guys to ask me a few questions quickly before we call it, before we finish this. Yesterday I read gold may even climb up to 2,200. Do you agree? Yes, completely agree. I think for me, gold prices can continue their journey to 2,500. What about crude oil under the current circumstances? Under the, like we said, the breakout has happened. Let's see how the breakout will really continue. Keep an eye on these two particular moving averages. If the price stays above that, then I think that this breakout is real, and then it will continue its journey to the upside. Crude oil is affected as well by current development. Of course, coronavirus has affected the global oil demand, but the recovery in crude oil prices have been very strong and robust. Dollar CAD, would you say anything? Again, CAD is a much better pair. much better currency than compared to dollar. So just keep an eye on that. Dollar is really the lagging currency right now. Which time frame you use to analyze the markets, and what time frame you use to enter and exit the market. I use weekly time frame to gauge the market, then I use the daily time frame for my entries. And again, because I don't like small trades, but otherwise I will use at least daily time frame to measure the market strength, and then I will use 30-minute as a as an entry point. What is your prediction on BTC? Up, up, up. BTC is likely to continue its journey to the upside. Let's just have a look at it, where it is trading today. Where is BTC? Here, 11,300. I think 15,000 is the next mark for that. For Forex Factory, would you recommend the events with high volatility events? Yeah, mostly with them. But other events also do pay attention, but it is about that. What is the oil range for the week? The oil range for the week, we have already broken out of it. So, that particular price level that you can see in front of you. Now, the next particular range with respect to oil prices, if this is the actual one, then it is going to be 40 to 46, perhaps. This is the area of the next resistance, which is really going to be in focus, going forward. What is my take on dollar yen? Again, pretty much the same concept over here as well. I think yen is likely to strengthen. All right, I think that's pretty much it in terms of the questions. I've covered most of them. As always, it has been a pleasure to be here with you guys. And please always feel free to ask me questions, to get involved on Twitter if you wanted to ask more questions, and I'll be happy to answer them. Adios, enjoy, and I'll see you guys next week, same place, same time.